Welcome to ADT Sharda Bai Pawar Mahila Arts Commerce Science College Shardanagar Baramati. We are learning the subject bookkeeping and accountancy, in which chapter 1 Introduction to Bookkeeping and Accountancy. As of now, we have seen the various concepts in accounting. Now, in last video we have seen 4 concepts of accounting. Now the 5th concept in accounting is going concern. Going concern means continue business. It is the basic assumption. It is considered that the business is going concern. It will continue its operation for the future year also. Winding up of the company will not be taken into consideration. It is basically thought that the business which is started, it will continued in future years. Going concern concept influences accounting practices in relation to what? Valuation of assets and liabilities, depreciation of the fixed asset, treatment of the outstanding and prepaid expenses, accrued and unearned revenue. For example, assets are generally valued at the historical cost. Historical cost means purchase cost of the asset. Any increase or decrease in the value of asset in the future year in a short period will be ignored. Only the historic cost and the cost price of the asset will be taken into consideration. Next important concept in accounting is realization. Anything which is there happened in the organization as a transaction, it should be taken into consideration for making the entry in bookkeeping and accountancy. Realization means actual happening of transaction. Income is recorded only when it is realized. That is, either it is received in the hands of the businessman or it is earned in the transaction with the proof. So revenues are recorded only when the sales are affected. So revenue income will be recorded only when the sales are done or the service are given for earning the income. Sales revenues are considered as a recognized when the sales are affected during the accounting period. Sales revenue will be considered as an income only when it is recognized or realized in a particular financial year, irrespective of the fact whether cash is received or not. Cash receipt is not mandatory, but the mandatory is that the transaction must happen. Goods must be sold. Transaction must be happened. Then only those can be recorded in the books of account. Example, a company gets an order of sale of goods of rupees 1 lakh in the May 2017. Goods of only 60,000 are sold and delivered in June 2017. Cash is received 60,000 in September 2017. So as per the principle of realization, sales is to be recorded in June 2017, not in the May 2017. So promise part will be ignored. The actual transaction which will be happening into the business organization, those only will be recorded into the books of accounts. Next concept is accrual concept. Accrual happened. Income is recorded when it is accrued, earned, and expenses are recorded when they accrue, become payable. All the expenses and revenue related to the accounting period are to be considered irrespective of the fact revenues are received in cash or not, or expenses paid in cash or not. So the actual cash receipt and actual cash payment is not important. Important is that it must be earned with the proof, means the transaction must happen. Example, a company invested 1 lakh with a bank for 1 year on 1st October 2015. Bank has to pay interest at 10% per annum on its maturity, that is 30th September 2016. So that will be known as a That will be known as a accrual concept. It means the bank pays the interest at the 10% at the end of 1 year. So that is known as a transaction is being happened and it is accrued. Next concept is dual aspect. Dual means two, aspect means effect. According to this concept, every transactions or event has two aspects, that is dual effect. For example, when Akshay start a business with cash 5 lakh, on one hand the business get the cash and on the other hand a liability arises. That is, the business has to pay the Akshay a sum of 5 lakhs. This is the concept which recognizes that the fact for every debit there is a corresponding equal credit. The amount which is debit in some account, those the same amount will be credited in some another's account. It means in every transaction two parties are involved. Two effect must be given. This is the basis of the entire system of double entry bookkeeping. From this concept, the basic accounting equation arises, that is capital plus liability is equal to asset. Means whatever will effect on the liability and capital, the same amount effect will also affect the asset side. So the total will be always equal. Capital and liability equal to all asset of the company. Students, hope you understood this video. Meet you in the next video very soon. Till then, thank you.